First, let's accept the truth. No one understood it at the beginning. Even the world's most successful investors once said, "I don't understand." For example, Warren Buffett built his foundation from scratch by spending hours reading finance books in his youth. This shows something important. Not understanding is not a weakness. It is a starting point. The problem is not saying, "I don't know." The problem is staying there. 2. The real problem, not lack of knowledge, but complexity. The financial world often looks unnecessarily complicated. Charts, terminology, technical analysis, constantly changing news. This triggers the brain's defense mechanism. According to behavioral finance pioneer Daniel Kahneman, the human mind tends to avoid uncertainty. So the process becomes, "I don't understand, it looks risky, I should stay away." This is a natural reaction. 3. A 5-step roadmap for those who say, "I don't understand anything." 1. Build a financial foundation. Before investing, learn personal finance, income, expense control, emergency fund, debt management. If the foundation isn't solid, investing creates mental stress. 2. Learn what's simple, not what's complicated. This is where passive investing comes in. For example, John C. Bogle, founder of Vanguard, argued, "For most people, a broad index fund is enough." Meaning, you don't have to analyze individual stocks. You don't need to be a macroeconomics expert. You don't need to read daily charts. 3. Start small. The biggest mistake people who say, "I don't understand anything," make is either never starting or starting with a large amount of money. The correct approach: start with a small amount. Experience the process. Observe your psychology. This is a learning journey. 4. Filter out daily noise. For example, the S&P 500 frequently declines on a daily basis, but its long-term trend has historically been upward. If you look daily, you see chaos. If you look at a 10-year chart, you see growth. Most people who say, "I don't understand," are actually exposed to too much information, looking at the wrong time horizon. 5. Accept this. You don't need to know every detail. No one knows the exact future of the economy. Even professionals are wrong. Research by Brad Barber and Terence O'Dean shows that individual investors tend to perform worse as they trade more frequently. Sometimes knowing less, but being disciplined, is better than knowing a lot, but losing control. A suitable approach for those who say, "I don't understand anything." For these individuals, the most appropriate structure is usually long-term perspective, low-cost products, broad diversification, regular investing, minimal monitoring. This reduces complexity. The biggest obstacle, psychology. Many people believe you have to be very smart to invest successfully. The truth is, success in investing is not determined by intelligence, but by behavioral discipline. Someone who says, "I don't understand anything," can be highly successful if they are patient, stick to their plan, do not panic. Ask yourself this question. When you say, "I don't understand anything," do you actually mean, "I don't know technical analysis. I can't read financial statements. Economic terms confuse me"? If that's the case, understand this. Most of those are not required to be successful. The realistic outcome. For someone who says, "I don't understand anything," there are 3 options. Start learning step by step. Build a simple and systematic structure. Never invest. But the third option is usually the most costly in the long run, because of inflation and opportunity cost. Conclusion. Saying, "I don't understand," is not an ending, it is a beginning. The real question is, will you let complexity stop you? Or will you move forward slowly with a simple system? Investing is often not a competition of knowledge, but a competition of patience.